China is facing its worst banking and real estate crisis ever. One that is so bad that it could actually lead to a total economic collapse in China. And you might be thinking, hey Lark, I don't live in China. Why the heck should I care about this story? Well, the impacts of this crisis are going to be felt everywhere. This could be China's great financial crisis, a 2008 all over again. If China's economy collapses, then no one is safe from the ripple effects that could have on the global economy. My name's Lark. I make videos on investing. If you like that topic, want to stay up to date with it, make sure to subscribe to the channel. And if you have a quick second to tap on that thumbs up button and show me you appreciate these kind of videos, that would be super awesome. Now let's get into this. And it's a dirty, dirty tale of bank runs, outright financial scams, defaults, and an over-powerful government. A perfect cocktail for economic chaos. Initially, this crisis was thought as isolated only a few small rural banks in China, with stories like this one coming from Hainan, where a private investment firm colluded with bank employees to basically take deposits and market financial products via other platforms and then basically transfer all that money over by fabricating out different lending agreements and stuff like that. Lots of dirty, scammy stuff going on. Now, deposits for these branches reached something like 200 million in locked funds by June 2022. Chinese authorities, they came in, they started censoring reports of the protests and the social unrest that were going on by making sure no one could talk about that on Chinese social media. Meanwhile, Chinese authorities did announce that they will start repaying most of the victims in what is now seen to be one of the nation's biggest banking scams ever. But your average person's only going to get like 50,000 yuan covered by the government, which is about 7,500 bucks. So a lot of people are going to end up losing their bank deposits, basically losing their life savings, which was supposed to be safe at the bank, right? But the problem is far more systemic than this. That's just the tip of the iceberg. The banking scams, it goes so much deeper because this crisis is almost totally driven by a property bubble of epic proportions, and it's popping. China's bond defaults hit a record $20 billion in July of this year. That's twice the amount that happened in 2021. Unsurprisingly, property developers accounted for most of the defaults. 18 out of the total 19 companies that defaulted on offshore debt came from the real estate sector. This is happening while we see new demand for housing by floor space is actually set to drop by 2.5% a year between 2021 and 2035. That's according to real estate and brokerage giant Beike. The primary reason for the decline is, well, China's aging population and of course some of the highest housing vacancy rates in the fricking world, which is the result of years of just wild and rampant speculation in the property markets and has even resulted, of course, in China's famous ghost cities, literal metropolises built by developers which not a single person lives in. It's insanity. China started to see a rise in mortgage defaults, which began in July, with banks no longer wanting to extend credit out to people looking to speculate in the real estate market because, quite frankly, the markets are way too overheated. In the most expensive parts of China, it can take up to 146 years to pay off a house from rental income due to how inflated the property values have become. That's absurd. Sounds pretty bubbly, if you ask me. And China is one of the most exposed markets globally to a property bubble, since 75% of Chinese citizens' wealth comes from housing. Only 25% in stocks and bonds. Real estate was seen as a safe investment, but not so safe apparently. That 75% number, by the way, it's about twice as much as in the USA. And by the way, most of this is actually new housing being built and sold to citizens as second or third homes, aka investment properties. These are ones that take generations to pay off, which 1 in 5 sit empty, and as of this month, approximately 9% of the housing floor space that was pre-sold back in 2020 and 2021 risks not being completed on schedule. That is because of basically developers all running into financial troubles with this global downturn, affecting roughly 2.4 million households in China. So not only will you never be able to pay off that house that you bought as your second or third house, if you can even find somebody to rent it to pay it off in the first place, but it might not even get completed. This has led to widespread economic damage across many industries in China, from building materials to real estate services to banking services. It's causing loan losses to pile up at banks in a massive way. Prices have fell for an 11th month in a row, and home buyers are starting to refuse to pay mortgages for unfinished units in China. That's creating billions of dollars in bad debt with the banking institutions. Now, analysts are estimating that home buyers could refuse to pay mortgages totaling as much as $370 billion if the properties that they bought remain unfinished. Now, I'm sure that many of you are going to remember the Evergrande story from last year. It's one of China's biggest property developers, started hitting the rocks. Yeah, that story never really went away. They're still in a terrible situation. They're continuing to spiral out of control. And the contagion, it's spreading. Shanghai developer group Shimao Group began failure of payments last month, which all leads back to the banking crisis. It's all in a big circle here. Depositors have begun demanding withdrawals of funds from these banking institutions with concerns that their life savings are being used to prop up these failing housing developer giants. We've had withdrawals being frozen at major banks across China after bank runs already happened by account holders earlier this year. People rushing to get their cash out of the bank because they thought the banks are going to be insolvent. And that's the situation in China right now. But how has the CCP reacted to this crisis? How is this potentially going to affect your portfolio and, of course, your bottom line? Well, I'm going to tell you that in just a moment, but real quick, let me break the flow to tell you about Wealth Mastery. This is my weekly cryptocurrency investor report my team and I put together for you. Comes straight to your inbox twice a week. Every issue packed full of value: NFTs, DeFi, altcoins, technical analysis, and much more. Our members love it. I know you will too. The best part, it's free. Sign up using the link down below in the description. So, how has the Chinese government responded to this unprecedented financial crisis, the protests resulting from it? Well, typical way they'd think they'd respond: sending in the tanks, sending in police. And I can't show you those videos because this video will probably be taken down if I do. But the CCP has been manipulating people's health cards as well, which is super evil. Basically, these are cards that are required for travel and public transport in China, as well as entry into public and private buildings. Basically, they were manipulating and showing us people being sick when they were not sick so that they could not go to the bank. They were prohibited from it. Super, super scammy, man. Although the CCP has since pledged to assist city councils in finishing real estate projects, and some of the people who did the manipulation of the health cards were punished, etc., etc. China's cabinet even held an emergency meeting with more than 100,000 participants to try to discuss new measures to try to stabilize the economy and to address this massive housing crisis that is going on in China. So on the one hand, the CCP is trying to use its iron fist to stop dissent over the bank scams and the real estate market collapse and the bad developers all going bankrupt. On the other hand, they know it's a real problem and they're looking for solutions. They need to find a way out. And to be fair, if anyone can sort this mess out, it probably is the CCP. They command massive resources, both financially and in terms of human manpower to do that. So they have the potential to do that. But let's talk about you. Let's talk about you. How does this story affect the average investor not in China? Well, China affects everything, as you probably know. A banking and real estate crisis there will have huge knock-on effects. It's the second largest economy in the world. Its continued economic instability could lead to a crisis the likes of which we've not seen in, well, 14 years. It would affect trade everywhere. South Korea, for example, is already declaring that China is the biggest threat to its economic stability right now. That's crazy stuff, man. The scale of this housing crisis, it is as big as or bigger than the 2008 housing crisis in the USA. So let's hope that Xi Jinping can pull off a nice magic trick here, get a rabbit out of the hat, so to speak, and avert crisis. Anyway, curious to hear your opinion on all this. Are you worried that this crisis could lead to a global financial meltdown? Or do you think it's going to remain isolated to China? It's not that big of a deal. It's not a new 2008. You know, the effect's just not going to be that big for the average investor outside of China. Curious to hear your thoughts down below in the comments section. Thanks so much for watching today's video, and peace out till next time.